First, we will see the book back questions, costing, book back questions, exercise questions. Then we will go for our own questions like that. We will discuss. Okay. So from these multiple choice questions, you will be getting around 5 to 10 questions. That is minimum 5 marks, maximum up to 10. I mean 10 to 20 marks like that. Okay. So 5 questions minimum from this you will get. From where they pick the question? From your study material only. Apart from that, we will see some of the past examination questions also. Look at this. Total cost incurred in operation of a business undertaking other than the cost of manufacturing. Is it including the cost of manufacturing or other than the cost of manufacturing? What is it? Direct cost is the manufacturing cost. Variable cost is the manufacturing cost. Conversion cost is a manufacturing cost. Other than the cost of manufacturing and production, we call it as commercial cost. What is commercial cost? Administration, selling and distribution expenses. Administration, selling and distribution expenses. That is point number C. So for one, answer is what? C. Now, question is not direct question. Question is a reverse question. They ask you other than the cost of manufacturing and production. They don't ask you what is cost of manufacturing and production. Other than cost of manufacturing and production, we spend what? Commercial cost. That is nothing but administration, selling and overheads. Next, which one is not a relevant cost? What will be relevant cost? We will consider for decision making. Whatever is considered for decision making, we call it as which cost? Relevant cost. A question which is not a relevant cost. Replacement cost we will consider. Sunk cost, amount already spent that cannot be recovered. Amount spent is spent that cannot be recovered. Will you consider for decision making? No. You already spent money for R&D. You already spent for marketing the product. To sell the product or not, whether that cost will you consider? No. Because cost is already spent. Sunk cost, the cost is already incurred. Okay. For example, you have done up to +2 or your college, etc. and all. To continue education versus going for business, will you see the amount spent so far? So far, you spent about 10 lakhs, let us assume, for whether to go for business or not. You want to take a decision. What about the amount spent so far? Is it irrelevant or irrelevant? That is irrelevant. Okay. For the business, what is the cost that is going to be incurred? For the business, what is going to be the revenue? Only that will be considered. Sunk cost is not a relevant cost. Other costs are relevant. Process cost, which is applicable in which industry? Process costing, inapplicable பண்ணுவாங்க. What do you mean by process costing? We had seen a product passes through multiple stages of production. A product passes through multiple stage of production. Second, sunk cost. That is not relevant. Process cost, which may be applied in which industry? Construction industry, like contract costing. Pharmaceutical company, they can apply process costing. They can apply both process costing as well as what? Batch costing. So pharmaceutical company, they can apply what? Multiple processes are involved, like mixing the chemicals, then processing the chemicals, packing it, and multiple processes are involved. So pharmaceutical industry can follow process costing, but best is batch costing now. Okay. Among the answers that are airlines company is a service costing. Airlines company is which costing? Please note the answer. Construction industry in a costing. This question change panni kekla. Okay. Contract costing can be applied in keta enna pannirpinga. Construction industry. This operating or service costing na airline company. Pharmaceutical company, they can apply either batch costing or which costing, process costing. Please note that. Construction industry near contract costing. Pharmaceutical industry, they can follow process costing or which costing? Batch costing. Airline company, na operating or service costing. Yes, that is the answer. The main purpose of cost accounting is to maximize profits. Are we here to maximize profit or value inventory? Maximizing the profits is subject of financial management. Helping the inventory valuation is financial accounting. Providing information to management for decision making purpose and aiding fixing the selling price, which is a correct answer. C is a correct answer. We provide information for decision making, such as fixing the selling price or controlling the cost or reducing the cost, allocation of cost and money. So for 4, answer is what? C. Opportunity cost is the best example for irrelevant or relevant? Relevant. Why? We always consider opportunity cost for decision making. For example, what is opportunity cost? I forego something for gaining something else. For example, I take fixed deposit from the bank. If it is fixed deposit, I will get 8% interest. I take the fixed deposit, invest in business. So opportunity cost is like 8%. If business can give me more than 8%, I will invest in business. Otherwise, I will continue what? Fixed deposit. So whether to withdraw fixed deposit, invest in business, or you withdraw fixed deposit, invest in share market. Clear? If share market can give you more than 8% return, you will invest in share market. It can give you only less than 8% return, you will continue as which one? Fixed deposit. So the profit that you forego, or next best alternative is what called as what? Relevant cost. That is called as opportunity cost. 6th part, you can answer. Fixed, variable and semi-variable cost is a classification based on behavior. B. Functional on the prime cost, factory overheads, administration overheads. Functional classification, what is it? Prime cost, factory overheads, administration overheads. Element wise na material labor overheads. Behavior wise only fixed, variable and what? Semi-variable. Classification according to controllability na controllable cost, uncontrollable cost. Controllable cost and uncontrollable cost. So answer is behavioral classification. Which method of costing is used for determining costing in printing industry? Process costing kadayadu, operating costing kadayadu, job costing. Every printing order is a job. Every job is a unique one. We manufacture according to the instruction given by the customer. It can be printing of visiting card, wedding card, anything. We use which costing method? Job costing method. Which are the thing which the management will have a least control? Least control in artham. That cannot be controlled in artham. Wages cost can control pada mudiyum.
Advertisement cost.
Actually, the question is a wrong question. Okay. Machinery breakdown cost, you will have no control. Advertisement cost, the company will have what? Least control. You don't have a control over the cost. 9th one. Variable cost is fixed for the period, the fixed cost. Fixed per unit, variable cost. For every unit, that variable cost will come. For every unit, the variable cost will come. So it is also called as unit cost. It is also called as which one? Unit cost. So variable costs are fixed per unit. Behavioral analysis, how do we classify the cost? Based on behavior. Fixed and variable cost. How the cost behaves. Is it fixed or variable or semi-variable? According to which one? Behavioral analysis. Then the answer is D. 11th part. Which of the following items are excluded from cost accounts? See, there are certain pure financial items not connected to production or administration or selling. They are not connected to production or administration or selling. Income tax, out of profit you pay. Interest on debentures is a finance cost. Cash discount is given for timely payment. Answer is all the above. All these things are not the cost that is included in which one? Cost accounting. Why? All these are not cost. All these are like expenses. Are they connected with production? The cost line, are they connected with production, administration and selling? No. So these costs are excluded from which accounts? Cost accounts. Next part. The following items are included in financial accounts but not in cost accounts. Carriage and freight we will include in both. Excise duty we will include in both. Royalty we will include in both. Dividend is paid out of profit. Dividend is paid out of profit. It is included only in which accounts? Financial accounts. Dividend is included only in financial accounts. Advertisement is direct expense, production expense, selling overheads, distribution overheads. Advertisement is given for selling the product or distributing the product or manufacturing the product. Selling overheads. Advertisements are which overheads? Selling overheads. We are manufacturing 20 doors. We are manufacturing 20 doors. It is manufactured like a batch. What do you mean by batch or batch casting? When batch casting is applicable? A group of products, similar products manufactured. When batch casting is applicable. So this will come under which method? Batch casting method. This will come under batch casting method. Prime cost, cost sheet la paathirukom. What do you mean by prime cost? Direct material, direct labor excluded. No, that is included. Total of all cost items which can be directly charged to production units. Cost incurred for finishing the product now. That includes factory overheads also. That includes factory overheads also. Large cost and the product cost. Answer is B. Now, what do you mean by prime cost? Or product manufactured, what is the most important cost? Material, labor and direct expenses. Material, labor and which one? Direct expenses. So answer is B. Guidance and regulation by which the cost of operating undertaking is said to be cost control. We try to reduce the cost, okay, by an action and operating and undertaking. So that is which one? Cost control. Direct expenses are known as direct expense. The overheads are irukka. That is not a process expense. Direct expense are known as which one? Chargeable expense. Indirect material is part of prime cost. Only direct material will be included. Indirect materials are part of which one? Factory overheads. Factory overheads paathom cost sheet podumbodhu illaya. It includes indirect material, indirect labor and indirect expenses, which is part of both prime cost and conversion cost. Okay, before that, what do you mean by conversion cost? What do you mean by conversion cost? Cost of converting raw material into finished product. Cost of converting raw material. Raw material already you are having. What is the cost of converting that into finished product? For example, cloth you are having. What is the cost of converting into a shirt? Labor plus overheads. Labor plus overheads. What is included in both prime cost and conversion cost? Prime cost, what will be included? Direct labor will be included. Conversion cost, direct labor will be included. What about direct material? That is included in prime cost. Prime cost is direct material. But conversion cost includes only direct labor and what? Overheads. What about indirect labor, indirect material? That is included in overheads but not in prime cost. Direct labor is part of both prime cost as well as what? Conversion cost. What is prime cost? Direct material, direct labor, direct expenses. So prime cost, direct labor included. What is conversion cost? Labor plus overheads. So both prime cost and conversion cost includes which one? Direct labor. Then the statement showing breakup of cost is known as. In the statement, the breakup of cost order prepare cost sheet. Prime cost, factory overheads, administration overheads, selling overheads, like that. We give a breakup of cost that is known as which one? Cost sheet. Works cost plus administration overheads. Cost sheet போடும்போது பார்த்தோம். Works cost plus administration overheads. The format பார்த்திருக்கோம் இல்லையா? Direct material, direct labor, prime cost வரும். Prime cost is called as prime cost. Then add factory overheads, it is called as which one? Works cost. Works cost plus administration overheads. Works cost plus administration overheads is known as works cost plus administration overheads is known as which one? Cost of production. Cost sheet la பார்த்தோம் இல்லையா? Works cost plus administration overheads is known as which one? Cost of production. B. Works cost plus which one? Administration overheads is known as which one? Cost of production. Directors remuneration is part of directors in a purpose car. Are they for selling? Are they for factory? Are they for administration? Directors take care of production or selling or administration. Administration. That is part of administration overheads. Director's salary is part of administration overheads. Cost reduction is a long-term one. It challenges the standards. It is carried out without compromising the quality. Answer is all the above. Answer is all the above. Cost reduction long-term la achieve பண்ண முடியும். Standards already fixed பண்ணிருப்பீங்க that we will change it because we are going to reduce the cost. It is carried out without compromising what? Quality. Answer is all the above. Interest on own capital. Interest on own capital, it is not a cash cost. For example, you invested your capital. Interest on own capital, are you paying it in cash? It is not a cash cost. It is a notional cost. It is a notional cost, means not a cash cost, it is a non-cash cost, notional cost, not a sunk cost. Sunk cost means already spent that cannot be recovered. It's not a sunk cost. It is which cost? Notional cost. It is notional cost. True or false question next. Process costing method is suitable for coal industry. Coal, we just extract from mine, we extract coal and sell it. The process எதுவுமே பண்றதில்லை. False or true? False. Process costing is not suitable for coal industry. So it is suitable கொடுத்திருக்கோம் false. Second part. Fixed cost per unit remains fixed. Variable cost unit vary with output. Is it true? Fixed cost per unit will change. Let me explain. For example, fixed cost total, let us assume it is 10,000. Monthly 10,000 we spend. Let's assume, listen, we manufacture first month or 5,000 units, second month 2,000 units, third month 10,000 units. If you work out cost per unit, fixed cost per unit, what will happen? 10,000 divided by 5,000. What in order? 2 or the other month quarter 5 rupees. Next month 1 rupee, like that. Per unit fixed cost will change. Total fixed cost will remain what? Same. Okay. Fixed cost total will remain the same. Per unit fixed cost will what? Change. Variable cost per unit will remain same. For example, variable cost per unit rupees 3 or rupees 4, it will be the same. What about total variable cost? What about total variable cost? It changes with production. For example, first month 5,000 into 4, second month 2,000 into 4, third month 10,000 into 4. Total fixed cost remains same. Per unit fixed cost changes. Per unit variable cost remains same, but total variable cost will change. So come back to this. Fixed cost per unit remains fixed. False. Financial accounts provide information for determining profit or loss. True. True. Cost accounting provides information for ascertaining financial position on a particular date? False. Why? Cost accounting is to fix the selling price, control the cost, providing information to management for what? Decision making. That is not providing any financial position. Financial position கொடுக்கிறது என்ன accounting? What is the financial position? Balance sheet. P&L account and balance sheet. Which accounts prepares? Financial accounts prepare. False. Cost accounting is an instrument for which one? Management control. True. Service costing is used in industries manufacturing goods. Service costing is used in which industry? Service providers. It is used by service providers. It is used by service providers. False. Sixth one is false. Seventh part. In construction industry, contract costing is used. In construction industry, contract costing is used. True. The process of finding the cost. The process of finding the cost is costing. True. For example, you are manufacturing something or rendering service. Find out the cost of rendering the service. That is what is called as costing. What do you mean by out-of-pocket cost? You have to spend cash. Out of pocket, you have to spend cash. Depreciation is an out-of-pocket cost. Is it a cash expense or non-cash expense? Depreciation, do you spend money? Yeah. Plant and machinery is there. We provide 20% depreciation, 2 lakhs or 4 lakhs, like that we write. Okay, that 4 lakhs do you spend now? It's a non-cash expense. Depreciation is a non-cash expense. It is not an out-of-pocket cost. Please note the meaning. Out-of-pocket cost na cash will go out. Please note the meaning. Out-of-pocket cost means cash will go out. Depreciation is a non-cash expense. So it's false. Ninth one is false. What do you mean by out-of-pocket cost? Cash will go out. Okay, there is no cash going out. Salary, rent, out-of-pocket cost. But depreciation is not a out-of-pocket cost. Then, variable cost per unit varies. Is it? No, variable cost per unit remains the same. Best example we had seen just now. Variable cost per unit remains what? The same. The 4 rupees now, 4 rupees now. என்ன கொடுத்திருக்காங்க? Variable cost per unit varies னு கொடுத்திருக்காங்க. Is it true or false? False. Then, all costs are controllable. Can you control all the costs? No. False. Cash discounts. What do you mean by cash discount? Listen, there are 2 types of discount given. One is called as trade discount. You come to my shop, I will give you, if you purchase 1 unit, it is 300 rupees. If you take more than 10 units, you take 20% discount. If you purchase 100 units, I will give you 40% discount. This is called as which discount? Trade discount. Trade discount to induce buying more units. Okay. What is cash discount? If you pay money on time, what is given? Cash discount is given. That is not a manufacturing cost, production cost, administration cost, selling cost. Okay. Cash discounts are not taken in cost sheet. That is a finance income, not a costing item. It is not a costing item at all. True. Trade discounts means, but please know, trade discount is given for which one? Trade discount is for volumes. Okay, when we buy more volume, we get more discount. That is included in cost. Cash discount is for on-time payment. For example, I gave you 30 days time to pay. You come and pay me in 10 days, I will give you discount, extra discount. That is called as cash discount. Cash discounts are excluded from cost. Next. Finance expenses are included in cost sheet. False. Finance expenses means interest, dividend, all those things are not included in cost. Finance expenses are not included in cost sheet. So false. 14th paragraph. Discount to customer comes under distribution cost. No. Distribution means, what do you mean by distribution? From my place, the goods should move to the customer's place. It may be like go down drain, delivery charges, carriage outwards. Okay, they are all called as a discount. There is a distribution cost. Discount allowed is not a distribution cost. False. Variable overheads. Is it a period cost or unit cost? Unit cost. False. Period cost or the fixed cost? False. Variable cost is called as unit cost. Period cost is known as which cost? Fixed cost. Cement industry, they work out cost per ton. True. They work out cost per ton. True. Next part. What is the next one? Scrap is a residue, comes out of manufacturing process, which has no recoverable value. The meaning is given for waste. Scrap is nothing but, pay attention, it's like you cut the cloth, thereafter some balance is there. That is called as which one? Scrap. Okay. The meaning that is given is here is for wastage. For example, listen, you manufacture using chemicals. After the manufacturing is over, the waste chemicals is there. And that is what? Residue that comes out of manufacturing process which has no recoverable value, that is the wastage. Scrap is nothing but what? The leftovers. Leftovers which will have some value, scrap will have value. Wastage will have no value. The meaning is given for which one? No, the meaning is given for waste. But they told it as a scrap. Scrap will have what? Recoverable value. So false. Please note, scrap will have a recoverable value. Only waste will not have a recoverable value. Okay, it's false. Next. What is the next one? Contract costing is a specific order costing. Yes, contract costing also. What do you mean by contract costing? When contract costing is used? Contract costing எப்போ யூஸ் பண்ணுவோம்? Methods of costingல பார்த்தோம் இல்லைங்களா? இப்போ contract costing யூஸ் பண்ணுவீங்க. Which industry use contract costing? Construction industry. But it is given here. Specific order costing, customer give instruction, accordingly only we will do the construction. So true or false? True. Next. All indirect items, indirect material, indirect labor, indirect expenses are called as overheads. True. Direct wages is a variable cost. Yes, it changes with output. True. Historical costs are relevant for decision making. True. Based on past only, we predict what will happen in the future. Contract costing is based on job costing principle. True. How? Job costing, I told you, contract is a large job, job is a small contract. Interior decoration, painting the house, okay, flooring work, small work, that will come under job costing. Building construction, floor construction, or flyover construction will come under which costing? Contract costing. Job costing, contract costing, both are same. Only thing is that contract costing is for long period. Same principle. Cost accounting is an instrument for management control. True. Abnormal costs are controllable. Yes. What do you mean by abnormal cost? Spending more than allowed. Can you control it? Yes. If through a strict control process, you can control it. For example, for manufacturing one shirt, you should spend 300, but you are spending 400. Abnormally, you are spending 100. Can you control the cost? Yes. How? Proper allocation of work, time management, making the workers trained, you can control the cost. So abnormal costs are controllable. Fixed cost per unit decreases when output increases and increases when output falls. This example we have done already. Look at the cost per unit. Fixed cost 10,000 when output is 5,000. What is the per unit? 2 rupees. When output decreases, per unit fixed cost increases. When output increases, per unit fixed cost decreases. Answer is true or false? Fixed cost per unit decreases when there is an increase in output. Yes. And increases when there is a reduction in output. True. Fill in the blanks question. Costing is a technique of Costing is a technique of, what do we do in costing? Ascertaining the cost. Costing is a technique of ascertaining the cost. Please note. Costing is a technique of ascertaining the cost. Cost accountancy is a science, art, and dash of a cost accountant. For a cost accountant, it is a practice. We call it as practicing cost accountant. So it is practice of a cost accountant. Cost accountant. Practice of a cost accountant. Cost accounting serves information for the needs of management. They provide information for management decision making. Cost accounting provides data for management decision making. Again, management decision making. Don't worry, they will not give you open-ended question like this. They will give you what? Options. You have to choose. Managerial decision making. Cost accounting has been developed because of limitations of financial accounting. What is the limitation of financial accounting? Financial accounts, do you record for future or past? Journal, ledger, trial balance, you prepare for past transaction, for future. Financial accounts. Journal, ledger, trial balance and all, you do for history or for the future? History. Okay, history is more like a postmortem. We just see what happened in the financial accounts. But in costing, we work out for current and future period. We work out current and which one? Future period. So that is a limitation that we remove in financial accounts. Okay, so cost accounting has been developed because of limitations in financial accounts. Next. Method of costing used in refinery. Refinery and the petroleum refinery. You could have seen BPCL, HPCL refineries in North Madras. What is it? Process costing. Petroleum industry enna use பண்றாங்க? Process costing. Goods transport company, cargo company க்கு என்ன cost unit use பண்ணலாம்? Liter, kilometer, ton kilometer. They carry weight, they carry. They work out 10 kilometers. They work out which one? Passenger transport, no passenger kilometers. If it is in case of a goods transport company, they work out which one? 10 kilometers. Next. Cost that does not change due to change in volume of production is called as production change பண்றதுனால cost change ஆகாது. Fixed cost. Fixed cost. Semi-finished goods are known as dash and cost accounting. Semi-finished goods are known as work in progress. WIP. Goods which are processed, finished goods. Yet to be processed, raw material. Under process, work in progress. We call it as work in progress. An item of cost which may be direct for the business, which may be indirect for another business. எனக்கு அது direct cost இருக்கலாம், உங்களுக்கு அது indirect cost இருக்கலாம். Direct for a business may be indirect for another business. Total of all the direct expenses known as cost sheet பார்த்திருக்கோம். Direct material, direct labor, direct expenses. Total we call it as prime cost. Prime cost. All costs are controllable or not controllable? Not controllable. All costs are not controllable. Indirect material plus indirect labor plus indirect expenses together called as indirect material plus indirect labor plus indirect expenses. Together they are called as overheads. Together they are called as overheads. Factory overheads are otherwise called as works overheads. And where the work takes place? Factory. So factory cost, works cost. Factory overheads, works overheads. Chargeable expense are example of direct expenses. Prime cost use பண்றோம் இல்லையா? Direct material, direct labor, direct expenses are otherwise called as chargeable expenses. Cost are costs which are ascertained after they have been incurred. After spending money, if you work out the cost, that is historical cost. Okay, after spending money, if you work out the total, that is called as which cost? past cost, historical cost. Okay, you estimate for tomorrow's order, that is estimated cost. Okay, you estimate it for today's cost, that is current cost. You estimate after spending money, that is called as which one? Or calculate the cost after spending money, that is called as which cost? Historical cost. Next part. Any expenditure above the prime cost, we call it as overheads, which may be factory overheads, administration overheads, selling overheads. Prime cost தவிர மற்ற எல்லா இருக்கிறது எனக்கு பேர் என்னது? Overheads. In dash, group of products cost is ascertained. இந்த மெத்தட்ல group of product manufacture பண்ணும். Batch costing. Batch costing. Sorry. 17th வந்து overheads. In dash, the cost of a group of a product is ascertained. In dash, cost of a group of a product is ascertained. Wait. Batch costing. Cost accounting is a separate branch of accounting. நம்ம first class ல பார்த்தோம், explain பண்ணிருப்பேன் startingலயே. What is branches of accounting? Accounting ஓட branch என்ன வரும்? Financial accounting, cost accounting, management accounting அந்த மாதிரி. So okay, cost accounting is a separate branch of accounting. Automobile industry ல என்ன cost யூஸ் பண்றோம்? Okay, cost unit is number of units manufactured. In automobile industry, for example, you are manufacturing two-wheelers, four-wheelers. What is the cost unit? How they measure the cost? Per hour, per kilometer, per liter, per unit. Per unit. Two-wheeler cost per unit, four-wheeler cost per unit. Per unit manufactured. Dash cost is partly fixed and partly variable. In the cost, partly fixed, partly variable. Semi-variable cost. Semi-variable cost. Fixed cost per unit with dash increasing output கொடுத்திருக்காங்க. Fixed cost per unit என்ன ஆகும்? Output increase ஆச்சுன்னா fixed cost per unit என்ன ஆகும்? இந்த எக்ஸாம்பிள்ல பாருங்க. Fixed cost 5000 units இருக்கும்போது 2 rupees. அதே output increase ஆகும்போது என்ன ஆகும்? So what is answer? Fixed cost per unit decreases when output increases, decreases. Wages of a delivery van driver in the overheads load. Factory overheads, administration overheads, selling overheads, distribution overheads. Distribution overheads. Delivery van driver. So they, for purchase of raw material, part of prime cost. Part of prime cost. We are selling the goods, sending the goods. So distribution overheads. Cost accounting deals with facts and figures and partly with estimates. Cost accounting we actually deal with facts, but we are also doing which one? Estimates. We are also doing which one? Estimates. Next part. Cost accountant provide details information about dash various products, processes, services and operations. Cost accountant என்ன information provide பண்ணுவாங்க? Profit, asset, liability, income, expense, cost information. Information about cost. Information about which one? Cost. So this is your book back questions that we analyzed. Apart from this, costing based questions we'll work out. We'll work out costing based questions. Or have a 10 minutes of break. Where we'll work out both numerical as well as theoretical question. Numerical question as well as one. Theoretical questions. That is based on, I've just gone through your past exam question papers. We'll based on cost accounting, not financial accounting, purely based on the last 20% syllabus. We'll work out some 20-30 questions based on which one? The past exam, model question papers, etc. We'll work out. Have a 10 minutes of break and let us continue. We'll start. You are going to take up and we are going to work out together. Just take up. This question will appear like they will give you one question, then you have to choose the answer. From question number 1 to 10, find cost unit. The cost unit answer options are kilometer, liter, shall we? Bus transport. In the option choose பண்ணுங்க. Bus transport. Is it kilometer or liter or meter or square feet, unit, job, passenger, kilometer, ton, kilometer, room days? Which cost unit you will choose? Passenger, kilometer. Cloth weaving, meter. Take it up. Tourist bus, kilometer. Whether 5 people travel or 20 people travel doesn't matter. How many kilometers you travel matters for tourist bus. Cargo or goods shipment, ton kilometers. Hotel is lodging, hospital for stay. They'll work out what? Number of rooms and days. Room days. Construction or interior decoration, square feet. Road lane, like national highways, street roads, road lane. How many kilometers you lay the road, based on that they will quote the cost. In case of water bottling company, petroleum process, which one they will apply? Cost per liter. Auto parts manufacturing, components manufacturing. They work out cost per unit. They work out what? Cost per unit. So this is called as cost unit. This kilometers, meters, liters, etc. are called as which one? Cost units. So based on this, they can ask you a question like this. They'll give you type of industry. Well, I mean, they'll give you options. You have to choose the correct option for which one? Cost unit. Done.
Job.
Sir, wait, another question.
5, 6.
Every job will become cost unit. Every job will become cost unit. Shall we? Or other? Is it over? Next. Identify the method of costing. What are the methods of costing? Job costing, contract costing, process costing, Can you tell me what is the method of costing used in all these things? What is the method of cost used in bakery? They make cakes, puffs, etc. Do they make one unit or batch? Batch cost. Construction led, contract costing. Automobile service,
Job.
job costing. You do your two-wheeler for service. I do the job according to the instruction. Hotels, lodges, operating or service costing. Then passenger transport, again operating or service costing. Milk processors,
Both.
oil refineries, petroleum refineries and the money. Maybe cooking oil or petroleum oil process costing. Pepsi and Coke bottling work, they do it as a batch. Confectionery, biscuits, chocolates manufacturers. Do they manufacture one chocolate? Batch. Sugar industries, process cost. So they will give you question like, what is the costing method used in bakery? They will give you options. Choose which costing. Batch costing. Shall we? Find the total cost, variable cost per unit and total cost for 9,000 units. For January and February, they've given output and total cost. They asked you to find out total variable cost, fixed cost per unit and total cost for how many units? 9,000 units. They will not ask you all the three questions in one question. They will ask you either one of this. Cost changes. எவ்வளவு change ஆயிருக்கு? 10,000. Output changed by 2,000. Whatever changes with output, we call it as which cost? Variable cost. Variable cost per unit is nothing but change in total cost divided by change in output. How? Whatever changes with output, we call it as which cost? Variable cost. So what is the change in total cost? What is the change in total cost? 60,000 to 70,000. What is the change in total cost? 10,000 divided by what is the change in output? 2,000. So what is the variable cost? Rupees 5 per unit. Variable cost. Wait, from total cost, we know January and February total cost. What is the total cost? Eliminate variable cost. Variable cost is like 5,000 into 5. 5,000 into 5, how much? 25,000. There it is, 7,000 into 5. 7,000 into 5, how much? 35,000. You will get fixed cost. And the fixed cost you can find, it will remain the same. From total cost, when we eliminate variable cost, we get which one? Fixed cost. Fixed cost will change or will remain the same? Will remain the same. So we worked out total fixed cost 35,000 per month. Variable cost is how much? 5 per unit. They want you total cost for 9,000 units. How to work out total cost for 9,000 units? Variable cost will be 9,000 into 5. How much? 45,000. What about fixed cost? Will it change or will it be the same? Same. What is the amount? 35,000 if you add up total cost. Total cost for 9,000 units is how much? 80,000. I repeat. Variable cost, change in total cost divided by change in output. 5 rupees per unit we get. We verify total cost Variable cost 5,000 into 5, 25,000, 7,000 into 5, how much? 35,000. Less panna, what do we get? Fixed cost. You can find January or February. Fixed cost is same. Variable cost for 9,000 plus fixed cost 35,000. Now, total cost will be 80,000 for how many units? 9,000 units. Take up this. They will not ask you all the three in one question. They can ask you any one. Suppose the question is find total cost for 9,000 units. Now what you have to work out? You have to work out all. Variable cost you have to work out. Fixed cost you have to work out. Then work out for 9,000 units. Take it. Shall we? It's a very famous question in the exam. Cost of goods sold is 50,000. Profit on sales is 20%. Find what? Sales. Can I add directly 20%? Cost of goods sold is 50,000. Can I add profit 20%? Is this 20% given on cost or profit is given on sales? This 20% given on sales or on cost? Sales. So can I put 20% on 50,000? No.
No.
This is cost. Profit add pannada enna varum? Sales will come. Sales, if it is available, on this we can apply 20%. Sales is not available. What to do? Simple. On cost, on sales we have to convert. Wait. How to convert? ரொம்ப simple. On cost if it is, sorry, on sales if it is 20%. 20% means 20 by 100. Nothing but 1 by 5. Nothing but 1 by 5. What is 20%? What do you mean by 20%? 20 by 100. 20 by 100 can be written as 1 by 5. What is this 5? What is this 1? It's a relationship, a ratio, then 1 by 5. What this 5 indicates, what this 1 indicates, means. Simple, listen. If you sell for 5 rupee, profit is 1 rupee. On sales, if you sell for 5 rupee, profit is 1 rupee. Then what will be the cost? If you sell for 5 rupee, profit is 1 rupee. On cost, profit 1/4 on cost. 5 ரூபாய்க்கு சேல் பண்றோம் 1 ரூபாய் ப்ராஃபிட்னா காஸ்ட் எவ்வளவு 4 rupees. So 1/5 on sales, we can say 1/4 on cost. So profit is not 20%. Profit is what? 1/4 on cost. So costல 1/4 போட்டா 12,500 வரும். Selling price will be 62,500. You can verify பண்ணி வேணா பார்க்கலாம். Salesல 20% போட்டா 12,500 வரும். Salesல 20% apply பண்ணி பாருங்க, how much will come? 12,500. Wait. Why are we converting? Cost is given, but profit is given on sales. So profit on sales 1/5. Now on cost it will become what? 1/4. Suppose profit on sales 25% கொடுத்திருந்தானே என்ன பண்ணிருப்பீங்க? 1/4 on sales na it will be 1/3 on cost னு convert பண்ணிருப்பீங்க. இது reverse conversion. Yeah, இந்த மாதிரி. Because from sales to cost வரணும் என்ன பண்ணுவீங்க? From sales to cost when you have to come, selling price minus profit will give us what? Cost. Take up this. Question number 24 பாருங்க. On cost எவ்வளவு percentage கொடுத்திருக்காங்க? 20%. Question is find cost of goods sold. Sales is given to us. எவ்வளவு? Less profit. 20% on what is given? Cost is given. So can I apply 8 lakhs into 20%? No. 8 lakhs is cost or sales? Sales. Can I put 20% of 8 lakhs? No. On cost, if it is 20%, 20 by 100, nothing but what? 1/5 on cost. 1/5 on cost. So how much will be on sales? You need to work out and tell me. What do you mean by 20%? 20 by 100, which means 1 by 5 on cost. Upper, what will be the relationship on sales? 1/6. When you go forward, cost plus profit will give us sales. 1 by 6 on sales. So profit is 1 by 6. 1 by 6 on which one? Sales. So 1 by 6 on sales. So less panna, you will get which one? Cost of goods sold. Sales minus profit will give us cost of goods sold. Shall we? Any doubt in it? Any doubt in it? Proceed பண்ணலாமா? Take up this question. Question number 25. Question is find the value of closing stock and which one? Profit. Do you remember cost sheet? First we will put prime cost, add factory overheads, add administration overheads. We will go work out which one? Cost of production. That is what is given. How much? 8 lakhs for how many units? 10,000 units. We will add opening stock of finished goods. Opening stock of finished goods, how many units given? 2,000 units are given. What is the value of the 2,000 units? What is the value of 2,000 units? 1,40,000. Less closing stock of finished goods will give us cost of goods sold. Then with that, you will add selling expenses. It is given 4 per unit sold, 9,000 units into 4. 4 per unit sold, 9,000 into 4, how much will come? 36,000. If you do that, you will get total cost. Then the sales is given to us. What is the sales given to us? 9,000 into 100. $9,000 into 100, 9 lakhs. Difference between total cost and sales. Difference between total cost and sales will be which one? profit. What is missing? What is missing? Closing stock of finished goods is missing. You have to value. How to value? First, wait pannu. Units la work out pannalam. What was the opening stock of finished goods? 2000. How much is manufactured in the current year? 10,000 units manufactured. Adala how much is sold out? How much is sold out? 9,000 units are sold out. Normally you think in your factory, you had opening stock 2,000, you manufactured 10,000 units, you sold out 9,000 now. You sold out what? 9,000 now. Apo closing stock will be the balance. What is the closing stock? 3,000 units. How to value the closing stock? How to value the closing stock? How many units? No thinking required here. Normal manufacturing, you had opening stock 2,000, you manufactured 10,000, 12,000 available. How much you sold out? What is the closing stock? 3,000. How to value? Simple. Closing stock of finished goods, how to value? 8 lakh we spend for 10,000 units. 8 lakhs we spend for 10,000 units now. What is for 3,000? 8 lakhs we spend for 10,000 now. What is for 3,000? So, cost of production, add opening stock of finished goods, minus closing stock of finished goods will give us which one? Cost of goods sold. Cost sheet la panadha 7 lakhs. Add selling expenses 36,000. Total cost 7 lakhs plus 36,000. 7 lakh 36,000. Difference 9 lakhs and 7 lakh 36,000. What is the difference? Profit. 1,64,000 profit. I repeat, cost of production is given to us, opening stock is given to us, closing stock of finished goods we value. How do we value? Simple. If opening stock was 2,000 units, okay, manufactured is 10,000, is sold out 9,000, now closing stock will be how much? 3,000 units. How to value? 8 lakh is the value for 10,000 now. What is for 3,000? 2 lakh 40. We get cost of goods sold. Then add selling expenses. 4 per unit sold. 36,000. Total cost is 7 lakh 36,000. Sales 9,000 units at the rate of 100. Profit is a balancing flow. At foundation level, they may not go this much, but still we should be prepared to take this up. Please remember, whatever you do in foundation costing, that is covered in inter also. Okay, intermediate level, cost accounting level, first 2 units will be whatever is there in foundation. It is repeated. Classification of cost, methods of costing, techniques of costing, preparation of cost sheet, everything is covered in the intermediate level also. But there, some deeper meaning, deeper understanding will be there. Here, just MCQ based. There, you have to work out cost sheet, estimated cost sheet with fixed variable cost. Descriptive model, you will work out a lot. Just a basic thing we work out. For other, is it over? Shall we? Next, a question can be tested based on this. Pure financial items ignored in cost sheet. Have we copied this or have we taken up this? Pure financial items ignored in which one? Cost sheet. Okay, they can ask you any one of the first items. These items are related only in which one? Financial accounts. Provision for bad debts, please note it. Interest, dividend, paid or received, cash discounts, These items are ignored in financial accounts, are included in financial accounts, but not in which one? Cost accounts. These are charged in P&L account, but not in which one? Cost accounts. Let me take up some of your past exam questions based on costing and let us see whether we discussed that in the class. Your website it will be there. You can go through also. Like fundamentals of financial and which accounts? Cost accounts. With the answers they would have given, you can go through. This financial accounts concept, I will do that in revision process. We will see. Only costing based question. We want to earn 20% on selling price. 1/5 on sales. 1/5 on sales, it will be 1/4 on cost. 1/5 on sales, it will be 1/4 on cost. 1/4 can be written as 25%.
You can divide
Total cost, yeah. You can use this for revision. You can go through a lot of 3-4 years model test paper will be available. During the revision, we will be using this. Total cost incurred in the operation of business other than the cost of manufacturing is known as, we had seen, book back, commercial cost, which is not a relevant cost, book back question, sunk cost. Process costing is applied in pharmaceutical industry. The main purpose of cost accounting is providing information to management for decision making. Opportunity cost is the best example for relevant cost. Okay, all our book back questions only repeated and tested. Okay, this is like a June term. This is like December term. Again, book back, whatever we discussed only will be there. Be easy for you to. Opportunity cost is the best example of same repeated. Variable cost is fixed per unit. The 20 ingredient dose batch costing. Process costing is applied in pharmaceutical company, which is excluded from cost accounts. All the above. Okay. What is the cost? Bills payable even if a company is closed, shut down. The main objective of cost accounting is to day-to-day business transaction, no. Measure business efficiency. True cost of products and which one? Services. 43. Cost reduction is, we had seen all the above. Guidance by executive action in operating of cost accounting is called as which one? Cost control. Cost divided into fixed variable cost and semi-variable cost according to behavioral classification. Which method is used in printing industry? Job costing. Statement of breakup of cost, we call it as cost sheet. The items that are not part of cost accounting is called as which one? Profit sharing. We don't include in cost accounts. Then, batch costing is estimated to determine
profit.
batch costing is used to determine economic batch quantity. What is the batch size you have to manufacture? For example, if you manufacture 2 large batch, what will happen? More storage cost will happen. If you manufacture 2 small size batch, you have to repeatedly keep on running the batches. Fixed cost will be more. So, economic batch quantity is a quantity where there is no huge storage cost or there is no huge fixed cost. You balance. Economic means what? The cost should be low. You manufacture such a quantity. For example, let's assume you are manufacturing and selling chairs. Will you manufacture 1 lakh chairs at a time? No. Why? Huge storage cost, investment will be there. Okay. Will you manufacture 5 chairs at a time? No. If you manufacture 5 chairs at a time, every day you have to run that production. Every day you have to run the production. You will manufacture like around 5,000 chairs or 2,000 chairs, so that you are avoiding too much stock as well as you are avoiding frequent manufacturing also. That is called as what? Economic batch quantity. So you can use this for revisions and other things. Majority of the things you would have covered in the class itself. So, we'll do the additional questions during the revision class itself. This is sufficient for costing. You can go through like 10 questions are tested in costing. None of this will go out of whatever we discussed. So 10 into 20 marks easily can come in costing. And revisions, attend the revisions, that will be 100% your requirement will take it. Yeah, I will take up full financial accounts as well as costing revision. I'll do that. I'll do it for about 4 days. I'll do for about 4 days, like 6:30 to 11 in the morning. I'll do for about 4 days. I'll plan and tell you. Attend the revision classes. I'll revise all the chapters. Okay. Concepts, MCQ. Concepts, MCQ, like that we'll proceed the revision works. Like, for example, first topic will be like introduction, general ledger, trial balance. Okay. So we'll revise for 10-20 minutes the concepts. Next 1 or 2 hours, practicing MCQ. Then BRS, concept. Then revise questions for about 20-30 minutes. Like that. Every topic, even if you're not prepared, if you attend the revision classes, you'll be able to attend. You'll be able to, do the thing. So, but only thing is that you have to revise previous class notes, just have some knowledge and come, then that will take care of it. So we'll start with this